Get ready for an epic clash. Warren Buffett versus Bitcoin. Join us as we unravel the debate, analyze the data, and explore the future of investments. Don't miss out. Legendary investor Warren Buffett is renowned for his skepticism towards Bitcoin, famously referring to it as rat poison squared. However, an interesting analysis suggests that if Bitcoin were included in a hypothetical portfolio known as the rat poison portfolio, alongside equally weighted holdings of Berkshire Hathaway, Microsoft, JPMorgan, and BlackRock stocks, it would have yielded significantly superior returns for Buffett, often referred to as the Oracle of Omaha. Despite Buffett's reservations about Bitcoin, the cryptocurrency has experienced remarkable growth and market performance since its inception. Advocates argue that its decentralized nature, limited supply, and potential as a hedge against traditional financial systems make it an intriguing asset class. Although Buffett has been hesitant to embrace Bitcoin, his track record as an investor is unquestionably impressive. If one were to construct the rat poison portfolio with Bitcoin included, the historical data reveals that the returns would have outperformed the portfolio without it. This analysis highlights the significant potential benefits that Bitcoin could have brought to Buffett's investment strategy, demonstrating that even a small allocation to the cryptocurrency could have bolstered overall returns. However, it is important to note that past performance is not indicative of future results, and the inclusion of Bitcoin in a portfolio carries its own set of risks. Bitcoin's volatile nature and susceptibility to market sentiment make it a highly unpredictable asset, which may not align with Buffett's long-term, value-based investment philosophy. While the analysis underscores the potential benefits of diversification and the inclusion of Bitcoin in an investment portfolio, it is ultimately up to each individual investor to evaluate and assess the risks associated with cryptocurrencies. Warren Buffett's stance on Bitcoin remains unchanged, but this hypothetical analysis raises interesting questions about the interplay between traditional investments and emerging digital assets. According to independent market analyst Alpha Zeta, incorporating Bitcoin into the rat poison portfolio with an annual allocation of just 2.5% since 2014 has resulted in a nearly 20% increase in returns while also reducing risks. As of now, the portfolio's returns stand at approximately 16%. This analysis challenges the conventional notion that Bitcoin's volatility poses a significant risk to a diversified investment strategy. Alpha Zeta highlights that Bitcoin's correlation with the stocks of Berkshire Hathaway, Microsoft, JPMorgan, and BlackRock is exceptionally low. This implies that Bitcoin's price movements do not align closely with the performance of these traditional assets. As a result, the inclusion of Bitcoin in the portfolio introduces a diversification factor that can potentially enhance returns and reduce overall risk. While Bitcoin is notorious for its price volatility, the analysis conducted by Alpha Zeta suggests that when combined with these established stocks, its presence has actually improved the portfolio's performance. However, it is important to recognize that the historical performance of the portfolio does not guarantee future results, and investing in Bitcoin still carries inherent risks. The findings of Alpha Zeta shed light on the potential benefits of incorporating Bitcoin into a diversified investment approach. It indicates that a small allocation to Bitcoin may offer an opportunity for investors to enhance returns while maintaining a level of risk that is comparable to the original portfolio. During the 2021 to 2023 bear market, the inclusion of Bitcoin in the rat poison portfolio could have acted as a powerful hedge, mitigating losses by approximately 10%. This observation suggests that Bitcoin has exhibited a tendency to counterbalance downside movements in the mentioned stocks. As a result, allocating a small portion of Bitcoin to the rat poison portfolio has emerged as a viable hedging strategy to offset potential negative returns. Bear markets can be particularly challenging for investors as they often witness significant declines in stock prices. However, the historical data indicates that Bitcoin has displayed a different behavior during these periods. Its decentralized nature and independent market dynamics have resulted in a lower correlation with traditional assets such as Berkshire Hathaway, Microsoft, JPMorgan, and BlackRock stocks. By incorporating Bitcoin into the rat poison portfolio, investors have potentially been able to reduce the overall impact of bearish market conditions. This hedging strategy has helped negate a portion of the losses incurred from the downward movements in the traditional stocks, thereby providing a more balanced portfolio performance. It is important to note that while Bitcoin has demonstrated this hedging potential in the past, it is not immune to its own price volatility and market risks. Therefore, investors must carefully consider their risk tolerance and investment goals when deciding to allocate a portion of their portfolio to Bitcoin. The observed ability of Bitcoin to offset losses during bear markets offers an intriguing proposition for investors seeking diversification and risk mitigation. However, it is crucial to conduct thorough research, monitor market conditions, and seek professional advice before making any investment decisions, as the cryptocurrency market remains highly dynamic and subject to regulatory, technological, and macroeconomic factors. Bitcoin has achieved an extraordinary level of growth, surpassing the performance of Berkshire Hathaway by an astounding 320,000%. Advocates of Bitcoin have positioned it as a potential alternative to traditional safe haven assets like gold. This is primarily due to its limited supply of 21 million BTC and the increasing deflationary pressure over time. Consequently, many individuals have been drawn to Bitcoin as a means of safeguarding their wealth against flat currency debasement and the excessive money printing conducted by central banks worldwide. One of the key factors driving the popularity of Bitcoin is its scarcity. With a predetermined maximum supply, it stands in contrast to traditional currencies that can be subject to inflationary pressures. This scarcity has created a sense of value and rarity, which has attracted a substantial number of investors seeking to protect their assets from devaluation. The growing interest in Bitcoin is evident in the significant increase in the number of non-zero Bitcoin addresses. Starting with only around 2,500 addresses in 2009, the count has now surpassed 45 million in 2023, as reported by Glassnode. This growth illustrates the expanding adoption and ownership of Bitcoin as individuals recognize its potential as a store of value and a hedge against economic uncertainties. It is important to note that Bitcoin's meteoric rise does not come without risks. The cryptocurrency market remains highly volatile, and its value can experience sharp fluctuations. Investors should exercise caution and carefully evaluate their risk tolerance before engaging in Bitcoin or any other cryptocurrency investment. While Bitcoin's remarkable performance has captivated the attention of many, it is crucial to maintain a balanced perspective on investment opportunities and consider factors such as long-term stability, diversification, and regulatory considerations. Despite Warren Buffett's recent comments referring to Bitcoin as a speculative token akin to gambling with no intrinsic value, he indirectly maintains exposure to the broader cryptocurrency markets through investments in companies like Nubank, which offers crypto-related services in Latin America. While Bitcoin has experienced a significant decline of around 60% from its all-time high of $69,000 in November 2021, it has also seen substantial growth of 100% since the beginning of the year. Since its launch in January 2009, Bitcoin has outperformed Berkshire Hathaway's portfolio by a remarkable margin of over 320,000%. Thank you for joining us on this thrilling journey through the clash of Warren Buffett and Bitcoin. We hope this discussion has provided valuable insights and sparked new perspectives on the world of investments. Remember to stay informed, stay curious, and continue exploring the ever-evolving landscape of finance. Until next time, happy investing!